Adani Group stocks under pressure on the back of a host of news flow. The MSCI says it will review and implement changes to the free float of the Adani Group companies. French energy giant Total puts its green hydrogen tie-up with Adani on hold while GST officials visit Adani Wilmar premises in Himachal Pradesh in relation to their operations in the state.
Cummins reports a solid set of numbers. The margin expand while profits surge 50% as strong domestic demand boosts business. Management in a con call says that they're witnessing growth across the board due to strong demand, but are cautiously optimistic and watchful for softening of capex cycle. The stock is up by a good 7.5%.
Trent delivers its highest ever quarterly revenue in the third quarter. Although margins miss estimates, the stock, however, is higher by 6% as the street likes the revenue growth.
And it was a poor third quarter for Piramal Pharma as the margins contract and losses widen. The stock is down nearly around 6%.
Another stock which is lower today is Manali Petro. Delivers a weak set of third quarter numbers. The profit declined sharply as an inability to raise prices and higher competition hits the company in the third quarter. Stock slumps 9%.
Well, the markets, at a crucial juncture, we're more or less flattish, as we said earlier today as well. Today, the buy on dips thesis is going to be tested. And from the lows, we're up closer around 90 points odd. Since its weekly expiry and going by the options data, the 17,750 level is very, very important. Today's low is in that vicinity of around 17,780 odd. So just watch out. Those lows of the day is something that you should be keeping in mind very, very closely. But the buy on dips thesis is being tested, and for the time being, the bulls appear that they are on top. Well, let's get straight to our first management. Then Jai Kumar Infra, they reported a steady third quarter with a 20% growth in net profit. The margins remained flat while revenues grew by close to around 10%. Mr. Kamal Gupta, the managing director of Jai Kumar, joins us on the show. Hi, Mr. Gupta. Good morning. Thanks so much for joining in. Well, let's understand a couple of factors first up itself. What kind of an order inflow have you all seen in the first 9 months? And for the year, what kind of an order inflow are you looking at? Go ahead.
We have already been awarded projects worth 2,152 crores in the 9 months of FY23. And we are looking forward for an order inflow of around 4,000 to 5,000 crores by the year end. We are also L1 in one BMC STP project of 422 crores, where our share is 51 crores, coming 215 crores.
All right. So we
have already bidded for projects worth 11,000 crores in various states of Maharashtra, Bangalore, and Bihar. And we are looking forward to bid for another 35,000 crores in coming 6 to 9 months.
All right, 35,000 crores worth bids in the coming 6 to 9 months. You expect 4 to 5,000 crore worth order inflows, whereas you've got a little over 2,000 crores in terms of inflows in hand already. So you are confident that you would make about 2,000 to 3,000 crores worth orders in the fourth quarter itself, right? If that's what we get correct.
You're right.
All right. And what about the execution of these orders? I mean, you had targeted about 15% sort of revenue growth in this year, and over and above that, around 15% plus in FY24 as well. Are you on track for that? And these orders that you're getting, are they at a higher margin than the legacy orders that you have?
Yeah, so our order book as on today is, as on December 30th, was 11,209 crores. And of course, our guidance for the year end was 4,000. We will surpass that, and we are expecting an total revenue of around 4,200 crores by the year end of FY23. So which will be around 20% jump year on year. And going forward for FY24, we are looking for around 15% growth.
And
okay. So you'll be closer to around 5,000 crores by next year.
4,700, 800.
800 next year. All right. I was just trying to push it a little bit to see how optimistic you are. But Mr. Gupta, what about margins? Profitability is going to be important. Good order inflow, solid order book, execution as well, fairly decent. At what margins do they come?
So as you are aware, like Jai Kumar is always focused on bottom line growth and not on top line growth. So if you see, like, our margins have been very consistent in the range of 14 to 15% year on year. And we are very sure, like, whatever order book is there is with secured 14 to 15% of EBITDA margin. And going forward also, we'll ensure that whatever projects or order inflow is there are with the secured 14 to 15% of operating margins.
All right. How confident are you of closing in on that 5,000 crore, 4 to 5,000 crore sort of order inflow in FY23? And more importantly, what's the kind of inflow that you're targeting in FY24? Because you said you're bidding for almost 36,000 crore worth orders over the next 12 to 18 months. And I ask this specifically because one of the brokerages has revised its PE multiple downwards from 13 times to 9 times, considering sluggish order wins. So that is something that's concerning the street. So they would like to know what kind of order inflow are you targeting for next year and how confident are you for this year?
Sure. So if you see our order book today of like 11,200 crores, it clearly gives a visibility for coming 2-3 years, looking to our revenue, which is around the order book is around 2.5 to 3x of our revenue. So there's a clear visibility for the coming 2-3 years. Well, this year, as we have given a guidance of 4 to 5,000 crores, and we have already secured almost 50% of it. And we are sure it will be like we'll be able to meet our targets by the year end. If at all not like a month or two ahead, that is Q1, we'll meet this targets. And to the next year also, we are sure that we will, the order intake will be minimum 5,000 crores for FY24 as well.
Okay, all right. Mr. Gupta, every time things start looking up, suddenly there's an inquiry by some of those regulatory bodies or the IT. I think you last paid a visit, say, around 2 to 3 months ago. You said that you all were cooperating with them. Anything came out of that visit from the IT department?
Yeah, there was an IT search in October 22, and everything was smooth. We have fully cooperated with the agencies, and nothing substantially has come out. Nothing significant is there. There's no.
But there's no communication as of now from them, or have you all got a clear chit from them?
No, it will take its own time. So they send the report, and then it takes its own time. But there's no substantial findings and no liability on J. Kumar.
How long does it typically take? I mean, when can investors expect any sort of update coming in from them?
I think it usually takes 6 months.
Okay. So 6 months is something that we'll watch out for. I mean, it happened about 3-4 months ago. So maybe the next couple of months itself, we'll get something on that front. And final question then, you said that you are bidding across projects in Maharashtra and outside of Maharashtra as well. As I look at it, normally, almost 2/3 of your, or 3/4 of your overall order book is concentrated in Maharashtra. You've been looking to diversify outside of Maharashtra as well. Do you have a target of this geographical mix going forward?
Of course. So we are doing bigger projects in NCR also. We are doing 2 NH projects of 1,500 crores each, plus a 1,700 crores of underground metro in Delhi NCR. So the order book, if you say, is 58% from Maharashtra now, and the rest is from other parts of the state. So it's a mix always. 2 years back, it was 60% or 50% from outside Maharashtra. So it depends on what opportunities you get in which state.
Okay, so, all right. Mr. Gupta.
We are open for that.
Yeah, Mr. Gupta, you're talking about executing, your execution plans are massive. Do you require any kind of funding? How is your balance sheet looking? And I just need to ask you, because often on I hear this buzz that maybe you're looking at doing a preferential issue.
No, there's no such plans, my dear. But if you see our debt, our gross debt is at 454 crores and net debt is only 10 crores. So debt equity ratio is 0.21. So we have sufficient leverage, so we don't need to raise funds in coming future.
All right. And the last time you joined us, you said that Metro will open by December 2022. Didn't open by December 2022, but the first couple of months of 2023, the important lines in the northern part of the city, the western suburbs, is done. What about the other Metro execution timelines? And this we ask as citizens of Mumbai.
Yeah, the shareholders Absolutely. As well as all citizens are tuned in. Go ahead.
So we are happy that line 2A and line 7, which is from Andheri West to Dahisar West and Dahisar East to Andheri East, compromising of 35 kilometers with 30 stations, are open to Mumbaikars and inaugurated by our Honorable Prime Minister, Mr. Narendra Modi ji. So this was done, and last year also our JNPT project was open to people. I'm also delighted to announce that tomorrow, 10th of February, we are opening the SCLR project, 2 arms of around 3 kilometers, that is Santa Cruz Chembur Link Road, by the August 10th of, again, our Honorable Prime Minister, Shri Narendra Modi ji. Coming to the metros, all the metro lines, the work is in top-notch speed. The Metro Line 3, that is the fully underground metro, is 88% completed. And we believe MMRC is looking to open part phase 1 from Sheets to BKC by December 23.
All right.
The other lines also, line 9A, line 2B, line
Right.
6, Pune Metro, Navi Mumbai Metro are going at very good speed. So Mumbaikars will get, like in this year and the coming year, a lot of metro lines to put use for them.
All right. The next 1 year, 2 years, we'll be looking forward to a lot of opening. In the near term, at least, guys from Santa Cruz and Chembur will be happy that they will see another line open on the SCLR as well. Thank you so much for joining in. Street likes your optimism. We have seen a bit of an uptick on the stock ever since you've been shown confidence that 4,000 to 5,000 crore worth order inflow is possible in this year itself. Take a short break, come back. We talk about more on the markets and individual stocks. Stay tuned. Well, remarkable resilience is what the market is showing this time around, and we've decoupled almost entirely from what's taking place in the Adani group of stocks as well. So 10% lower on Adani and 4% lower on Adani Ports. And at the same time, we've seen the market recover from lows. That's led largely by Reliance. And a couple of these mid-caps doing well. Jubilant Foodworks has moved to the high point of trade, and Trent as well, up 6.5% on a 54% jump in their revenues. But we're talking about stocks and results. Samvardhana Motherson reported a strong third quarter set with profits surging over 80% along with an expansion in their margins as well. We got in touch with the management and asked them an outlook on the margins and order book going ahead. Let's listen in to what they had to say.
What we can certainly talk about is the fact that the supply chain is looking a lot more stable than what it was earlier. Chip shortages are improving. We have commodities which are showing some signs of softening, and there is a pent-up demand that continues. All of this augurs well for the industry, and that implies that we should be showing an improved performance going forward as well. How much now is a function of, obviously, a whole host of headwinds also exist. There is the inflationary pressures that continue to be there. Interest costs continue to be on the rising scale. And then, unknowns keep coming up in this volatile world. So very difficult to predict, but at least directionally, we are still hopeful that we should be able to show a better performance or even better performance than the current one in the following quarters. We give our order book once in 6 months. So next quarter, we will release our new order book. But directionally, I can only say that we seem to be growing and seem to be growing profitably in our new orders as well. A lot of capacities are already on ground, given our capexes were done actually pre-COVID. So much of those ramp-ups will happen in our existing capacity. So capexes should look relatively more stable as well going ahead. So all in all, I think we're well prepared for any form of growth, and at the same time, I think adapted ourselves to react to any of these exogenous factors, which we still don't know. But I think the plants are now geared up to react to many of the exogenous factors that have hit in the past. So we're much more ready to take on whichever way, whatever comes our way, basically.
All right. Just a quick check on the markets. Then a couple of stocks. Just take a look at Trent. It's flying away. Jubilant Food as well at the high point of the day. And Info Edge that has holding in PB Fintech. That stock, in fact, has suddenly seen a big spike up. Just keep an eye out on that one. It saw a sharp correction when some of these new age themes went lower. Now, in fact, it's seen quite a big recovery. For the time being, let's shift focus to our special segment where we get you a few ideas for profit from Money Control Pro. Neha Dave of moneycontrol.com joins us to talk about a stock that she's tracking rather closely. Neha?
Today's stock idea is SBI. SBI reported its highest ever quarterly profit in Q3 FY23, driven by strong loan growth, margin expansion, and lower credit cost. The profit growth was also boosted by treasury gains during the quarter. SBI's overall advances growth improved to 18% YOY growth as of December end, led by both retail lending as well as the corporate advances growth. Deposit growth was muted. However, SBI's credit to deposit ratio is still among the lowest among the large banks. Margins saw expansion during the quarter and will be supported in the near term by the rising interest rate scenario. The asset quality trended better with both gross as well as net NPA ratio trending downwards. Slippages also declined, and restructured book of the bank is contained at 0.8% of its total advances. Provision coverage ratio for the bank is healthy. That said, SBI has exposure to Adani Group, which is amounting to 0.9% of its loan book. Consequently, the stock has corrected and the valuation has moderated. In terms of valuation, the bank is currently trading at around 0.9 times estimated book value for FY24, which is attractive considering that return on asset has improved to above 1% and return on equity has also inched above 15%. The stock will remain volatile, but that presents an opportunity to astute investors to accumulate for long term.
All right, let's take a short break. Come back. We get you more on the markets as well as individual stocks. Stay tuned. Well, Gati is one of the stocks which is actually correcting quite a bit. It's currently at the low point of trade. And the other one which is seeing some profit booking from the broader markets is Varun Beverages, a big mover in the last few trading sessions on account of strong numbers coming in, 13% higher for this week. But just some softness today, maybe some bit of money being taken off the table. But the word coming in from Uday Kotak is Indian corporates need to borrow more from Indian institutions and not foreign banks. The veteran banker spoke to CNBC-TV18's IBLA jury at the CNBC-TV18's IBLA jury event. He said that the risks of global borrowing is that foreign lenders may actually not understand the Indian dynamics as well as domestic lenders. Listen in.
I think, and I see a lot of corporates here, they should be borrowing more from Indian financial institutions. They're borrowing too much from outside. I'm sure my banking colleagues will agree with us.
Mr. Khara, you want to come in on that as well?
No, I think market is probably guiding them to borrow more from the Indian market. No, global markets are.
And I believe that, and I'm not going into any specifics. I think this is a time for Indian financial sector to build its capacity, both in terms of underwriting skills as well as scale. And I do not believe global financiers necessarily have better underwriting skills, but India has to hone it, and its own financial sector should be able to do thorough diligence and get its underwriting right. If we do that, and we need to build a whole host of capacities in India so that corporates feel that the first port of call is to borrow from India. And the risks of global borrowing is that a person sitting in New York, London, Zurich, Hong Kong, Beijing, wherever, may not understand the Indian dynamics as well and is very much focused and impacted by media reports globally. And decisions can be taken more superficially without going necessarily into the facts of the case.
Well, Uday Kotak also said that large corporates and startups are flourishing in India, but not the middle-level companies. The rest of the IBLA jury also supports him, saying that India needs to fix the missing middle for scale on a sustainable basis. Let's hear it out.
There's a lot of activity at the startup level, at the really small early stage, and there is pretty good investment by the big guys. I think what India has to focus is the middle corporates who have to be a core part of the building of India. And it is there, I think we really need to focus. India must fix the missing middle for scale on a sustainable basis.
We also need to look at industries which have to compete globally, need global scale. There's a Chinese steel company which produces more steel than all of India put together. Right? Bao Steel is bigger than the steel industry of India. So if you have to compete with global players, you need scale. So you need the big guys to also scale up because India should be competitive, Indian industry should be competitive. So I think we need to, I agree with Uday that we need to build that capability. The big companies also need to play a role there because a lot of them are part of the supply chain of the big companies. So there's a lot of work that we need to do.
We are really at an inflection point. Having said that, we shouldn't underestimate our other countries who are really also wooing a lot of the FDI, like Vietnam, Thailand, Indonesia, which are also becoming, and the whole ASEAN bloc is becoming quite a big beneficiary of the China Plus One. Having said that, I think our PLI scheme has been really, and the low corporate tax rate has been really attracting foreign direct investment in a meaningful way.
All right, with that, we're out of time on this edition of Chartbusters. You stay tuned to CNBC-TV18 Trading Hour. Comes up next.
Friends, I want to share some